Breaking news on Martyn Lucas Investor. We are looking at ASTI, Ascent Solar Technologies. We're going to be looking at the chart, some news, the fundamentals, and see where it's going. It's a very, very volatile stock. We've been seeing it go from 19 cents to 11 cents, from 10 cents to over 30 cents. So we want to see how best how it's looking and also look at the fundamentals. So firstly, looking at the chart, we'll also be looking at the fundamentals. We're looking at a chart which is very, very volatile. Of course, it's been in a downtrend, which is not good to see. However, has it found a base? Has it found a bottom? The market cap is currently around $3 million. So it's a very, very cheap company for what it does, in my opinion. Again, I'm not here to give any financial advice. Don't take anything I say as financial advice. And let's quickly first jump into some of the fundamentals of this stock. So I'm asking ChatGPT about ASTI. Let's see what the profitability is. As of June 2024, ASTI Solar Technology is struggling with its profitability, which is not good to see. Over the past year, the company's stock price has plummeted by 99.52%, indicating severe financial challenges. I'm not sure if that's accurate. ASTI reported a net income loss of 31.5 million and a gross margin of negative 323%. The company's operating margin is negative 3,800% and its profit margin is negative 9,000%, reflecting in its significant relative profitability. ASTI revenue for the last 12 months was 339,000, while operating income was negative 13 million, indicating that the company is not generating enough revenue to cover its operating expenses. Additionally, ASTI has been negative cash position of 2.59 million, with 187,000 cash and $2.78 million in other AI software, which is telling us it's got. Oh, do we have any information here? Yes, we do. 5 million of assets, 800 and it's got 187,000 in cash and about 2 million in liabilities. I think that was correct information then. Let's continue. The company has received a non-compliance notice from NASDAQ due to its failure to meet the $2.5 million stockholder equity requirements, further highlighting its financial difficulties. So it does have some difficulties on hand, but that is reflected already in the stock price, which we'll come back to the chart very shortly. Let's see what percentage of the shares are currently shorted. Let's see if that has an answer, and we can also compare it to our analysis here, which is telling us, saying 5.2. Let's see if we get the same information. 2.8. So it's from a few sources we can see it's between that 2 to 5%. So it's really not much being shorted. So there's no real short squeeze that can occur on ASTI. Instead, if big players come and buy it, then it's going to have the same effect because of the low market cap of $7.2 million. If someone buys $5 million of the stock, it can really, really send this the price of this stock higher. Let's ask it another question of what the market sentiment is around this stock currently, and what are the growth perspectives for the stock in the next 5 years. Let's see into the future as well. And also, I've got one more question I want to ask after that, so let's ask it that. And also, how does ASTI debt to equity ratio compared to the industry peers? I want to see that debt to equity ratio, the ratio. So this is not the actual numbers, it's the ratio. Is it similar to what other competitors are? Let's send it that. Okay, let's see its first response to what's the sentiment. The sentiment around ASTI, recent stock performance. ASTI has experienced a significant surge in stock price recently, partly due to increased tariffs on Chinese imports of solar cells announced by President Joe Biden, which has boosted interest in the domestic solar stock. So that is recently, so this is good news. Market and sector trends. The broader solar sector has a positive sentiment, especially with government policies favouring domestic production. However, ASTI's stock has a high volatility rate with an average weekly movement of 10% compared to semiconductor industry's average of 6.9%. Financial challenges. Despite some positive news, ASTI faces substantial financial difficulties. Short interest, about 5.25% of the float is shorted. Growth potential. This is what's important. If this company survives, which it looks like they will, because it doesn't take much right now to run a company like this, in my opinion. Technological advancements. ASTI has made a significant strides into improving its copper, iridium, gallium, selenide solar technologies. Recently, they achieved a cell production efficiency benchmark of 15.5%, up 10.8% in 2012. The company is targeting further improvements to reach an efficiency goal of 18% through its process optimizations and its new material like zinc oxysulfide. Strategic partnerships. ASTI has partnered um, with Momentus to develop and market advanced solar arrays for the rapidly growing satellite market. If you are still watching the video, I do really appreciate it, so please do hit the like button, and if you haven't already, please do subscribe. Leave your comments down below about this stock. Is it one you're holding, and are you excited for the interview coming up? So let's continue. These arrays are designed to be cost-effective, resilient, and capable of generating substantial power with minimal degradation in space environments. The partnership is expected to enhance ASTI's presence in the aerospace sector. Revenue growth and protection. ASTI has outlined ambitious revenue growth targets. For 2024, the company projects revenues between 9 and 13 million. Looking ahead to 2025, ASTI anticipates revenue to reach between 50 and 80 million, driven by increasing demand in the aerospace and agrivoltaic sector. New product developments. The company continues to innovate with its Titan modules, which have demonstrated increasing power generation capabilities. ASTI aims to further enhance these modules to meet the growing needs of their customers, particularly in space and agrivoltaic applications. A lot of amazing things here. I love a company that innovates like this, and so it's looking good. How does the debt to equity ratio compare to its industry peers? Debt to equity ratio. ASTI's current debt to equity ratio is not explicitly stated in recent reports, but it is evident that the company has significant financial struggles. As of latest reports, ASTI has a 2.78 million in total debt and a negative equity position of negative 255 million. Their negative equity means that the company's liabilities exceed its assets, which is serious financial concern. We do not have confirmation of that. The current ratio is 0.16, so we don't have confirmation on that. Let's get back to the chart and show you what I think about the chart and the technical side of this. So yes, recently it's over the last few months it's been heading down. However, after good news, as we saw what ChatGPT said about the tariffs on the Chinese imports and trying to support the US businesses, we've seen some really big moves. We've seen it go all the way from 9 cents to 33 cents. Where is my next buy zone? My next buy zone for the stock is anywhere between 9 cents. I mean, I would even be DCAing into the stock right now because I love the fundamentals. However, very, very risky stock at the moment. The market cap is very low. There's definitely financial struggles out there. However, that is reflected in the market cap. You're buying a company that I can see the market cap's about 3.4 million. So 9 cents would be an area I'd really, really like to buy a lot more of ASTI. Again, everything I say is not financial advice. If I was trading it, then I might take some profits at 19 cents and try and buy back lower where this trend line would be next. For example, if this stock, let's get a drawing tool out. If this stock drops to about 9 cents, it can go back to this level of the trend line, come back down, and then go to 18 cents. And then wherever this line is here, maybe at 14 cents, that'll be my area I would want to buy back in. And hopefully we can break the 20 cents level and head higher to the 27 cents level and just see some nice accumulation in this area here and try and sort out a base. If we start losing the area and start losing 9 cents, then again, the stock is going to continue going down, and that won't be good for the company. I want to see it not to lose the 9 cents level. That is very important for this stock. Just looking at some quick indicators on the weekly chart, that MACD won't even help us. We have to look at the daily. Whether Mac. Oh, I've got the wrong tool. Sorry. Let's see what the MACD is showing us. You have to zoom in a lot for this stock because of the previous price action. So yeah, the MACD is nothing special. Unfortunately, it's moving. The daily is moving into the red zone, so it looks like there's some more downside potential, and the RSI is moving down to maybe the bearish control zone. So we might actually get our buy price of 9 cents, and that's where I would be looking to buy the stock. So thank you for tuning in to this video all the way to the end. Definitely leave a like and leave your comments down below. We'll be leaving you the interview, which will be over here. That's coming up very shortly, and we'll hopefully be covering the earnings, so keep an eye out for that, and then any other playlist or videos at the bottom here. Until next time, take care of yourselves and each other.